Hello, everyone. Very happy to welcome you at another online event of Crypto Valley Association, Meet the Blockchain VC. Today, we have a bit of different program due to the actualities of the current environment. We don't talk to, we talk about the VC space, but we have a very interesting company presenting himself, or Chris Maurice, who is presenting his company Yellow Card, which is very active in Africa. I think I'll let him introduce himself and his company. And we have with us today my very estimated co-head at Crypto Valley Association Investor Working Group, Demelza, who is also leading the research team at Cointelegraph, and who talks us about the current space and how she sees what happens and what happened in the last few days. So I'm very welcoming you, Chris and Demelza, to today's event. I welcome our audience to be here with us, and I hope that we'll get that we can provide you with some useful and interesting content. So please, Chris, Maurice, introduce yourself and Yellow Card, and Demelza later, please introduce yourself and your position at Cointelegraph.
Yes, thank you, sir. In honor of Silicon Valley blowing up, you're bringing a non-VC to Meet the VCs event. So I appreciate that. Yeah, so I'm Chris. I am the co-founder, CEO of Yellow Card. We are the largest crypto exchange on the African continent. We operate in 16 countries, all in Africa. And yeah, basically market making on and off ramp for African fiats.
Okay, nice to meet you all. You've met me before. My name is Demelza, and I am the Director of Research at Cointelegraph, and I'm also the Portfolio Manager for the Zeltner & Co. Cryptocurrency Frontier AMC.
Thank you. Great. Could you maybe both of you inform us how you got involved in the blockchain space?
Sure. So I got into crypto in 2013. So I was in pretty early. My now co-founder is a big nerd. And so he was, scourging web forums back in the day, and all over Reddit and all of that, and just learned about it very early. And that was all he wanted to talk about back then was Bitcoin. And so after about a year and a half of hearing about it consistently, right, I started to really dive in more. And by 2015, I was fully down the rabbit hole, and that's when I realized this is what I'm going to do with the rest of my life.
I have a similar story. So I'm also celebrating my 10th year anniversary this year. It's 2013, class of 2013. And so is Cointelegraph, actually. We're having a 10-year anniversary party at the Paris Blockchain Week. Cointelegraph also came in 2013. I've been with Cointelegraph for 3 years, but my backstory is I was working for the Department of State as a Fulbright scholar in India, and my job was to study self-help groups, which were basically microfinance groups of women that were saving around $2 per month, and they didn't have enough savings to warrant the bank giving them a bank account. It was also in a region of India where it just wasn't common for females to have their own personal bank account. And also the bank was normally located, a whole day's drive away from where these women were living. And so they would save their money in groups and give each other loans based on kind of the merit of each woman's investment opportunities. And I was supposed to study how they could basically what were their saving rates, what were their repayment rates, interest rates, and yeah, I started looking online for micropayment solutions, and Vodafone's M-Pesa came up, which was popular in Kenya at the time, and it was spreading into India. And then so was Bitcoin, actually. So Bitcoin was mentioned on Reddit as being a possible technology for micropayments, because at the time, Bitcoin still had blocks where you could put in a transaction without a fee on it. And so, you know, one of the BIPs, I think in 2015, kind of got rid of those transactions that were for free. But yeah, essentially at that point, it was still touted as a possible solution for microfinance. And now we're going back in that direction again with Lightning Network, of course. So that's also exciting. But yeah, that's kind of how I got into crypto a long time ago. Just learned about it, and then 2015. By that point, I was also down the rabbit hole and a full blown Bitcoiner. So similar story.
Interesting, thank you. Now I suggest that we discuss a bit the business model from Yellow Card, and that we open the discussion and talk more about the current state of the space and the biggest potential and the biggest risks. But maybe first, you know, I want to know from Chris. I mean, you have a very clear focus on the African continent. Again, I mean, in a nutshell, you told us what your products are, but maybe give us a bit the reasoning behind. I mean, it's impressive, of course, biggest blockchain company in the African continent, in a continent where banking is a big issue, payments are a big issue. But tell us a bit about your specific products, also why you focus on Africa.
Yeah. So I mean, I think to answer the why first, right? It's because of everything you just said. Banking is a big issue. Currencies are a big issue. And actually, sort of fun anecdote about how I got there in the first place, right? I was at a Wells Fargo one day in Auburn, Alabama, of all places. And there was a Nigerian guy who was sending $200 to his family, and the bank charged him $90 to send 200 to Nigeria. And I thought, you know, this seems absurd, right? And I talked to the guy and I said, hey, have you heard of Bitcoin? It's free, it's instant, it's fun, all this great stuff. And I went home and essentially started thinking, you know, what's this guy's family going to do with $200 of Bitcoin, right? You know, like, we've solved the middle of the problem, right? I can send him money no matter where he is in the world. But then, you know, what are you going to do with that? Can you buy food with it? Can you pay your rent with that Bitcoin in Lagos, right? And I'm not sure if I knew where Nigeria was on a map at the time. They don't teach you nearly as much about Africa as you might think they do in the American education system. But I set out to understand everything that I could, right? And yeah, eventually I met this guy on the internet, as all good stories start. Met this Nigerian man on the internet, and he convinced me to come to Lagos and just see it for myself, right? And really experience the problem firsthand. And yeah, and it's you know, it's everything that you said, right? The banking system is unreliable. The currency in, you know, not to pick on Nigeria, but in Nigeria inflates over 50% a year last year. And when you have sort of an economy and you know, broader ecosystem that's like that, especially in the largest economy on the continent, it leads people to seek alternatives, right? And that's what crypto provides. And that's specifically what we provide as well, right? So with Yellow Card, we have three main products. There's the exchange, which is exactly what you think it is, right? We accept all locally applicable payment methods: cash, mobile money, bank transfer. Put your local fiat on, buy USDT, buy BTC, or vice versa. Number two is a product called Yellow Pay, which essentially enables peer-to-peer cross-border transactions between African countries. So if I'm in Nigeria, I need to send money to Ghana, then you can do that very easily, right? Receive it on fiat on both sides. We power it through the exchange on the back end. And then the third product is an API suite that allows companies to be able to integrate our on and off ramps for, again, promoting this on the continent, right? And just making it more and more accessible for anybody on the continent to be able to get in and get out of the crypto ecosystem.
How would you judge now the current payment and remittance market in Africa? I mean, what is it? Who are your competitors, or what's maybe also your market share already in the remittance space?
Yeah, so we're not a remittance company, right? Remittance, however, is a very powerful use case of crypto. And so it's hard for us to say specifically what our remittance market share is because it's just a use case of sort of the underlying asset. But what I could do is I can point to sort of companies like Western Union, which have been completely dropping off in market share in places like Nigeria. And that's solely because of crypto, right? Western Union reports that Nigerians sent 60% less money last year than they did the year before, right? Nigerians abroad did not stop loving their families. They just found better ways of getting them money, right? And so remittance is, I think, a very powerful use case for crypto on the continent. And I think the only thing that I would say about remittance is that there's this misconception out there. I hear all the time this conversation about how much should remittance cost, right? Right now it costs about 9% to send money to Africa, the most expensive corridor in the world. And there's this conversation constantly of how much should it cost. And I've heard from different players in or out of the crypto ecosystem, it should only be 1% or it should only be 2%. The reality is that when you're sending money to most African countries, these countries need that money flowing in, right? So you're the one really providing the service here. You're the one providing the value by sending dollars into a country like Nigeria where they need hard currency flowing into the country. And so I think the question needs to be completely flipped. It's not how much should you have to pay to send money. It's how much should you be paid to send money to Nigeria and to these places, right? And that's what crypto does in practice. I get more than $1 when I sell my crypto in, say, Cameroon on an exchange like Yellow Card, right? I get about $1.04 in Cameroon when I sell my $1 of Bitcoin for franc in Cameroon, right? And so remittance on crypto rails, especially to emerging markets, sort of flips that question on its head, and it's actually how much you should be paid to send that money.
Yeah, so completely understandable. I mean, how is it now? I mean, I share your thought. I think you help a lot to the people using your service, to the families, which can then enjoy basically these transfers at much lower costs. How are you welcomed or criticized by regulators in this country? What do you see? Are they open to this kind of discussion? I mean, on the end, probably also, let's say, the national banks, for them, it's also certain risks, right? If they lose their position as a gatekeeper, you come in here, you're how are these discussions, or do you hold these discussions maybe, and are they also different? Maybe if you talk to the people using your services from the government and from the civil society, maybe, which are not linked to the government. By the way, Demelza, please feel free if you have a further question also to add.
Yes, yeah, that is a complicated question, my brother. Look, there's 54 unique countries on the African continent, and if you ask all of them, you'll get 55 unique answers, right? And so I would say, so I guess I would preface this by saying that we are the only licensed crypto exchange on the African continent. We have licensing right now for 7 countries, and in a number of other countries, we have sandboxing, formal AML reporting, etc. So it's something that we see ourselves as leading the way on and sort of writing the playbook for how do you regulate crypto on the African continent, right? And the way that we see it is there's excluding North Africa, right? So focusing on sub-Saharan Africa, North Africa, totally different regulatory regime, right? But looking at sub-Saharan Africa, you have countries in essentially 2 different groups, right? You have countries that just don't really want to talk about it and are not interested. They think it's bad or scary, but they don't really want to touch it, right? And then you have countries that are a little bit more innovation forward, right? And want to better understand how crypto works, right? They're a little bit more inviting. They have questions, that kind of thing, right? both of which are important, right? But you know, what I would say is when we're talking to regulators, and I think our team has quite a bit of experience with this. We've actually worked with several regulators, including most recently the Bank of Botswana, on actually implementing crypto regulation in the country, right? So Botswana has a formal crypto licensing regime now because of the work that our team has done with the Bank of Botswana there. I think that, you know, when we talk to regulators, the pitch is, hey, look, this is happening, whether you like it or not. It's going to continue to happen, right? And I think when you look at the numbers, it's very obvious. People don't necessarily realize how big Africa is for crypto, right? Because Africa sort of missed the boat when it comes to the internet and other things. There are more daily active users on crypto in Africa than there are in any other continent in the world outside of Asia. You have 6 of the top 20 countries on, you know, most recent Chainalysis reports are African countries in the world for crypto, right? And so there's just quite a bit of crypto activity going on the continent, right? And so, look, I mean, you know, we get invited constantly to sit down with regulators, and we basically show them their ranking on this list, and we tell them, you know, look, this is gonna happen, right? This is not us, right? We're not the reason that you're number 3 on this list, right? So the question is, do you want to work with us? Do you want to regulate this industry in a safe way, right, and make it accessible, prevent scams, right, sort of formalize it? Or do you want it to continue to exist in the black market, right? And generally, when you present it that way, it's a much easier yes, right?
Yeah, this is interesting. Also here now, given the recent events, notable exchanges, how is Yellow Card managing its risk in this new environment?
Well, not banking with Silicon Valley Bank is a good start. That's that's yeah, I mean, so I would say, frankly, the way that I see the recent events is the US government has been making moves toward this, but has now fully declared war on crypto, right? I don't see, at least I have not seen any information, although I only have publicly available information, right? But I have not seen anything to suggest that Signature Bank, for example, was really under the liquidation crunch that Silvergate and SVB were. Yet the regulators saw an opportunity to shut down and send a message to crypto, and they stepped up and did that, right? And so I think, you know, when we look at sort of this new industry and or this new world, right, after this past weekend, I think it's almost less about choosing our banking partners carefully and more about trying to do more and more of our banking outside of the US, right? I think it's clear now that the US is going to continue to fight against crypto onshore. And you know, look, I mean, they're making the exact same mistake that we tell countries not to make, which is if you fight this, it's just going to go offshore. It's just going to go to places where you can't control it, right? And so that's the big thing that we're looking at is, you know, if this situation continues to get worse, how do we make sure that all of our banking can exist outside of the US, right?
Demelza, what are your thoughts on this? I think it's important also to know your opinion as for also maybe from Cointelegraph, for how you I'm sure also internally you have certain discussion. What do you think?
Sure. Well, you know, I think a lot of banks are going to find themselves, let's say, broke, so to speak, in the next couple months, especially banks in the U.S. I mean, even the Central Bank of the United States is broke right now, in the sense that, you know, interest rates went up so quickly, and there's a mismatch of maturities, you know, and I think that what we saw with the immediate action by the government was, you know, basically, for me, it shows that their solution now going forward is just going to be to create more money, and maybe it won't be at the cost of taxpayers, as they said directly, but it will be at the cost of taxpayers via the silent tax, which is inflation. And so I think that a lot of people over the weekend, and more people every time a bank has problems will get switched on to Bitcoin and alternative cryptocurrencies. So for me, it was a hard blow to the on ramp and off ramps for fiat to Bitcoin or fiat to crypto, as the U.S. lost its three main crypto banks. But overall, it turned a lot of people on to Bitcoin. And I think that, as we saw with the big move up, I looked at the price earlier, it was like 25,500. It might be up to 26,000 already. I don't know if it passed 26K or not, but as that huge volatility swing, to me, it kind of shows how, probably now analysts are betting that they're not going to raise rates by 50 bips during this March's Federal Reserve meeting, and instead they're probably going to raise it by 25 bips, and then the market raged based on that. And so I think that we overall, I just think that Bitcoin is still offering people a way to do transactions outside of the banking system with full reserves. There's one Bitcoin is backed by one Bitcoin. There's no fractional reserves with Bitcoin, and so I think it's very powerful, especially in this time as we come close to maybe the end of a long-term debt cycle, if you want to call it that, in Ray Dalio's type of terminology. But yeah, so anyways, yeah, and I tend to agree with Chris that it's unfortunate that the United States is doing this because there's a lot of talented people in the United States, and those people are going to actually have to stifle their own innovation, or they will have to move to another country if they want to innovate, which is like the opposite of what the US was grounded on, and where a lot of its success came the last 200 years. It was because they were a home for innovators. It was a home where people could take risks and innovate. And now that's not no longer the case. So
Yeah,
there's
I
definitely
think
something symbolic to the idea that Silicon Valley Bank is collapsing, along with the idea of Silicon Valley. So
yeah, I mean,
good
it's
point.
I've just talked yesterday with a Swiss bank providing service for crypto companies, and I mean they have obviously very important inflows already starting with FTX, and now in this case too. I think, of course, also being very thoroughly and regulated by the financial market authorities. I think now probably they have a very good and important use case, and many let's say big crypto and especially institutional institutions in the space. I mean, they want to make sure that they are onboarded on an infrastructure which is also in a stress situation working well. And I think it's obviously sad that the US doesn't provide anymore this solution, and yeah, we'll see. We hope that this has. I mean, it's good for the ones who are now winning the game, but on the other hand, it's also very difficult, obviously, for the whole industry. Nevertheless, I mean, I was during the weekend a few times on, let's say, checking the fiat price of Bitcoin and Ethereum, and I was kind of astonished of these price hikes. Even if you see now today, I mean, Demelza, I think we are at 26, maybe a few dollars below just, and I mean with an important hike again. Today, would you have thought that this happens? I mean, before in many crises, when solution providers vanished, Bitcoin price came under stress. Now here it went the other direction. I was kind of astonished. How did you foresee this, or did you expect this?
Well, I mean, as people like Chris, we've seen so much volatility over the last decade in Bitcoin, and I thought up until 2020, on March 12th, when there was the flash crash in Bitcoin down to 3K, up until that point, I kind of had this naive opinion that at some point the central bank is going to, let interest rates really go up like Volcker did, in the 80s, and basically let the market kind of return to a normal, a free market that determines the interest rate. But then when they came in with that, zero interest rate policy and basically just pumped back up the markets immediately in response to the COVID flash crash, that's when I kind of had this realization that the central banks are in a very tough position and they don't have a lot of options except for to continue to debase the currencies. And so when when uh, when this kind of happened and SVB went under, and all, the stock prices of Signature started to drop, and then they stopped trading of Signature on Friday afternoon, and because it had gone down 32%. I basically I kind of foresaw that they were going to bail out the banks, because it's they don't really have if they had not bailed out the banks, then today all the banks would have had a run on them. Like a Monday morning, we would have had Wells Fargo, Bank of America, Chase. They would have the large banks would have had just complete pandemonium. And so they had to stop the bank runs from spreading. And so I did kind of see this happening. However, I did not think that Bitcoin would kick back into gear and go up to 26,000 within just a half of a week, from 19,000 to 26 within 3.5 days or so. So that was a sudden move up.
Chris, do you want to add something here?
No, I think that's completely right.
So what do you think now? I mean, it's interesting. I mean, before I've noted this question, I mean, that maybe we should also discuss, I mean, in the recent year, let's say the Bitcoin thesis that it will be a store of value in an inflationary environment seemed not to work. Now, if we look what happened the last few days, it is a bit different again. Of course, it's few days, and we don't know. I think we can't develop general rules of some things we saw which took place in a few days. But what do you think? Will Bitcoin be the right mean in an inflationary environment? Will it be? Where do you see its use case in this environment?
Yeah, I think what I would say is that in order for Bitcoin to really be used for store of value, there just needs to be less speculation overall, right? There's still a lot of speculation, right? Most of Bitcoin's trading volume on a daily basis is still speculation. And I mean, as long as you have that, you're going to have price swings, right? Until the market cap gets to, several $1 trillion, and, in the trading volumes, there's, infinite liquidity, and the trading volumes don't matter. And so, yeah, I mean, I think, for the time being, you're still going to see those price swings. Long term, I think it sort of takes on more of that shape of, a good, proper store of value as you get sort of less speculation, or the speculation becomes a lower, lower percentage of the overall market cap. But I think what I mean still excites me about the asset and sort of the broader ecosystem and everything is that, maybe this is not happening as much in the US and Europe, but in other parts of the world, crypto is not just a store of value. It's also, Bitcoin is used for payments, right? Bitcoin is actually used for, moving money around internationally, right? Avoiding the US dollar when it comes to international payments, right? Not having to go fill out forms at the bank and, beg them for hard currency, things like that, right? So even despite the sort of the fluctuations in the price, I think it does still provide that, those use cases for payments and for things like that. I think the other thing to consider when we think about Bitcoin as a store of value is that, you know, your average person is not storing one Bitcoin, right? Your average person does not have, you know, $26,000 that they're storing in their savings, right? And so, you know, Bitcoin might move around, right? And obviously it's still going to impact people the same percentage wise, right? But obviously, you know, you're talking about losing a lot less money if it's, you know, $100-200 that you're trying to save, right? And it's, you know, bouncing around a couple dollars here and a couple dollars there. So that might, you know, that might mean something to the person whose savings it is, right? But, you know, again, your average person is not talking about massive amounts of money swinging, you know, either way.
Now, you both have a US background. You're born in the US. Now, how do you see maybe, I mean, you both now, you live in Barcelona, Chris, Demelza, you're off, I think you're in the UK. What's the discussions maybe with your peers or also with your friends? How do they see maybe this space? Is there a frustration about this current crypto regulation or non-regulation, or more like suppression? Also, I mean, in the end, I think what is very harmful in the whole discussion, always like, you know, are you a security or not? In the impression, I looking from abroad, I have the impression they discuss it now since 5 years. And we're still basically at the beginning. It's always swifting from here and there, and we don't really know what's your impression, or what's the impression of your friends? What do you hear in this respect?
US is boring now, man, except for Florida. Florida's still cool, but the rest of the US is pretty boring. I don't know. Yeah, I mean, look, yeah, I think, you know, when it comes to the industry, I don't see it getting necessarily any better. I think since the Biden administration took over, we've seen sort of just like steady movements against crypto. Obviously, you know, there's an election coming up next year. I don't necessarily see it getting better regardless of who wins, right? I think if Biden were to get reelected, I don't think it certainly doesn't get better, right? But I don't necessarily see a change at the executive level really stopping the, how do you say, the ball from rolling downhill, right? So you know, we'll see. I think until we really get some crypto friendly politicians in Congress and in I mean, you know, at some of these senior leadership levels, but then also in the how do you say, the bureaucracy, right? I mean, you need crypto friendly people, not just at the top, but also in these, you know, these government agencies that actually do all of the all of the work, right? And so you know, really until you just have more pro crypto people running like the Treasury Department and running the Fed and running, you know, these different agencies, I just don't necessarily see it changing, right? And so is that going to happen within the next 4 years, 6 years? Probably not, right? I think it's, you know, going to continue to be a bunch of, you know, people that are sort of old fashioned when it comes to finance and everything. And so, yeah, I mean, you know, we'll see how long it takes. All roads lead to crypto, right? So.
Oh, you're muted, Martin.
Yeah, I think it's interesting. I mean, first of all, I think now we have a very general discussion, which I think it's interesting at the current time. I mean, on the other hand, I think if we see the announcement last autumn of BlackRock, I mean, you know, supporting or collaborating with crypto exchanges, where and also clearly promoting that basically everything will be crypto in a few years, be it a regular share or be it, you know, like, so I think it's very contradictory, and it's interesting that the government and these government agencies are not more like embracing it and looking for like a tough but clear and pro-business regulation as we have it in certain other countries. I think could be a very missed opportunity. Nevertheless, I mean, I think the American financial market is the biggest one in the world, and probably will also be for a certain time still the biggest one in the world. but still, I think there is a mismatch if you have the chairman of the biggest asset manager of the world, which claims we believe that everything will be basically tokenized or in the form of a token or an asset token or whatever, and on the other hand, you see that the government and the state agency, they're just not really moving forward. It's just lots of noise, but in the end, there is no clear outcome and no decisions are really taken. And I think this is a bit sad, but maybe I think, Demelza, I think you are very much probably also in this topic. I'm wondering how you see this.
Well, I was never a fan of the current chair of the SEC. So my doctoral father was the chief economist of the CMTC when, Commodities Futures Trading Commission, CFTC, when Gary Gensler was the head of the CFTC. My doctoral father was Dr. Andrei Kirilenko. And I in 2018, I went to a Chatham House meeting at Wharton where, there was only 25 people. Actually, I was part of the Liechtenstein group that went, and there was 3 or 4 people from Liechtenstein there, including people from the FMA, and Gary Gensler was there, and there was only about 25 people. So I got to speak to Gary Gensler directly about his viewpoints, and we're not allowed to say what was said during those meetings, but from that day on, I knew that if he ever got into the SEC, that it was going to be not good for crypto. And I actually posted that a lot when he got, because people said, oh, he was teaching a course on Bitcoin, he's really pro crypto, and and I always said no, and like, just because you teach a course on crypto doesn't mean that you yourself will create regulation that supports crypto. And so a lot of people in the government feel that they have to protect us from ourselves, and they make the argument that grandma won't know better and she'll lose her savings if she's allowed to do various types of risky investments. And Hester Pierce is still fighting the good fight at the SEC, I think, and trying to object to a lot of this. But it takes, like Chris said, it just takes a whole team of people constantly fighting the good fight in order to make progress against this very strong headwinds. But to your point earlier about Bitcoin as an inflation hedge, I think that, like, I have a very macro-centric viewpoint of asset prices, mostly because I think that, over the last 40 years, we've just seen interest rates go down further and further. And so I think over the last 40 years, for the most part, traders have mostly, we have kind of like 2 economies. We've got the financial economy, and then we've got the real world economy. And I think the financial asset economy is really just looking at what central banks are doing. And so we had a lot of money creation during COVID, and that took time to, get distributed throughout the economy. And so the inflation rates took time to really grow. And, it's kind of like a lagging indicator in the sense that, we had 10% inflation each month, or not on an annualized basis, sorry, for the last couple months, like in the last part of 2022. But Bitcoin's price kept going down. And then people were saying, well, is Bitcoin really an inflation hedge? Because we have inflation, but Bitcoin's price is going down. But I think that it's important to look at what the Fed was doing, which was they were raising rates, they were tightening the money supply. And so, as a lagging indicator, that should mean that in a couple months, inflation should go down, right? And so, I think that now that we analysts on Bloomberg and stuff are now saying that no, they're not going to raise rates that much more. I do think that as long as we don't think the central bank can continue to raise rates, that all risk on assets will continue to go up in price. But it just depends if the U.S. wants to kind of print itself into if the central bank keeps printing money, and if they loosen the money supply, that will make the dollar itself less important in the global scale. So there's kind of a trade-off right now between, raising rates and making the dollar important again as a global reserve and medium of exchange, or letting it debase and just basically the US becoming less and less of a world power. And I think that this is a large dynamic that's going to play out over the next decade. And yeah, and we'll see where it goes. But I do think that they're going to have a hard, if they do raise rates, we're going to have to get rid of decades of misallocation of capital, and that's going to hurt so bad that many people are going to be unemployed, and asset prices are going to get hit very hard, and many banks are going to fail. Many people's savings will get wiped out. And so I don't think they're going to go on that way, because it's not going to be politically palatable.
Yes, there's a question in the chat. Is Europe going to follow US and crypto regulations and repression? I'm not going to pretend to be a European expert, so I don't know, maybe you want to take that.
Yes, I mean, we talked a lot about the US, but I think also, I mean, we're here in Switzerland. We also have to talk the environment which is around us, and this is Europe, of course. Also here, different countries, different approaches, probably lots of coordination difficulties between these different state agency. Maybe also, Demelza, I think you have had some very developed thoughts. Can you start in replying to this question? Where do you see is Europe heading towards?
Well, one thing I'm really excited about that Europe's working on is the DLT pilot regime. So that started in March. They've been working on that for a couple years. That's from the European Union level. And what they're allowing is basically like a sandbox where private firms can experiment with tokenizing or real-world assets that will be securities, and that retail traders can trade. So it won't be only for professional. I mean, there'll be different ways you can build your company and apply for this, but you can basically tokenize a real-world asset on the blockchain that's public. It doesn't have to be a private blockchain. That's what's exciting about this. Number one, they're allowing public blockchain technology. And number two, they're allowing retailers. And I think that that's really exciting, because eventually, we could have a world where buying a security is like buying something on Amazon. You could see reviews, you could see pictures, you could just have a shopping cart of your products you want to buy. It could be private equity, it could be investing in your friend's startup. I think there's a lot of opportunity to tokenize assets, and the EU, I think, is being very sensible to have a pilot where firms can, I think they can do up to $1 billion in this pilot regime. Don't quote me on the exact number, but they can do up to a certain amount. And during those next 3 years, they're gonna work closely with this cohort of firms from all around the EU that apply for this sandbox. They're gonna monitor it, they're gonna learn about it, and then they're going to create sensible regulation. So I really like this approach of doing an experiment first, learning, and then regulating, versus what the US is doing, which is hammer down before innovation.
Yeah, they're very interesting. I mean, especially that in the past, at my perception, it was like inverted roles, no? I mean, often Europe, with its approach to legislate, often they did a legislation on something and they didn't allow innovation, because if something was not allowed, then it was forbidden. And the US, in the past decades at least, had more like the approach, as long as it's not forbidden, it's allowed, which helped probably a lot of innovation also in the Silicon Valley at this time, which wouldn't have been possible in any other part of the world. And now it's interesting what you mentioned, that these role up to a certain extent have changed. Yeah, maybe now I think we're coming soon to an end, but I still would also like to know, I mean, we talked a lot now about Bitcoin, about store of value. I think it's also interesting, especially also now with having Chris with us and you. I mean, there are many other, let's say, use cases, especially now also in the Ethereum environment and with other protocols providing more utility than the Bitcoin protocol does, and maybe I would like to see what's your thought on this? Where do you see its opportunities? I mean, we saw, of course, many projects in the last 5 years which didn't start really to fly as well as they should have or could have, but still, I mean, there's still lots of innovation and lots of possibilities in the tokenization and in the design of a first and also second layer protocol. Where do you see here opportunities?
Yeah, I think when we look outside of Bitcoin, look, obviously there's a lot of innovation going on these chains, but I think, you know, let's not sort of overlook what's powering most of these big chains, which is stable coins, right? It's you know, Ethereum. It's most of these transactions on Ethereum are Tether and USDC, right? If you look at the Tron chain now, Tron has more USDT than Ethereum now, right? And so it's you know, it's really I think that there's certainly a lot of, you know, various innovative and decentralized platforms and protocols and everything that can be built on these you know, on Ethereum and on technologies like that. But I think that you know, the financial use case, right, and the ability to be able to move money around the world and all of that is still the most powerful use case, and it's still the largest on basically any of these chains, right? That's essentially all Bitcoin is used for. And then when it comes to Ethereum, when it comes to any of these other major you know, major chains and everything, it's stable coins that are really being moved. That's what the big volume is, right? And so yeah, I mean, you know, for what it's worth, we deal mostly with Tron. It's not exactly my favorite thing in the world, but but that's what people want, right? They want USDT on Tron because it's significantly cheaper than Ethereum. You don't have to worry about ETH fees, anything like that, right? I can send money for less than $1 anywhere in the world, send $1 million, and you know, it shows up instantly, right? And I think that's really what people want, right? And so yeah, you know, I think when you look outside of Bitcoin, frankly, I think a lot of these chains are just competing on cost, right? You know, they all, I'm probably going to piss some people off by saying this, but they all basically do the same thing, right? You know, they provide you, you know, a chain and a platform that you can build really cool projects on and a lot of really cool stuff. But at the end of the day, I think most of the transactions that are happening are still sort of financially based, right? And you know, really being dominated by stable coins.
Well, I have to agree with you. I mean, even if you have a DApp, do you really want your gas fees denominated in volatile underlying that, you know, your DApp costs one day a certain amount, and your DApp, you know, to play a video game on the blockchain costs you X amount on Monday and X amount plus Y on Tuesday. It's just it's hard for DApps as well. I know it'll upset people as well. I mean, Cointelegraph, we pay about 200 people per month on staff. We started out paying them with Bitcoin only when that was the only cryptocurrency in town. But over time, you know, we switched to Ethereum, we switched to the stable coins on Ethereum, and then we switched to Tron. So like a lot of people, and even our clients also mostly want to pay in, you know, Tron, USDT on Tron because it's affordable. And so one of the things I did was, you know, I've been looking at the on-chain growth of Tron, even through the bear market. You know, transaction volume on Tron for stable coins actually grew over 2022. And so, you know, I made a strategic investment in Tron with the Zeltner and Co. cryptocurrency frontier. So I'm definitely also excited about, you know, low cost stablecoin transactions. I do think that's a huge use case. I mean, it's kind of like the euro dollar. It's outside of the US banking system, but it's pegged to the dollar, except for it doesn't have to touch banks at all. So it's like a euro dollar on steroids. And I think that's a great opportunity. I'm also excited about Polygon. I think that, you know, I think there's a lot of discussion between where will this other activity go? Will it go to competing layer ones? Will it go to layer twos? And I think that, you know, we saw with, you know, Optimism, we saw EVM compatibility, which I think was pretty exciting. it brought on a lot of users very quickly, but their scaling solution maybe wasn't the best. But whereas Arbitrum didn't have a great EVM compatibility, but on the other hand, it had the ZK rollups, which was a really nice scaling solution. And now Polygon releasing the ZK rollups with EVM compatibility, I think it has really changed the game for Polygon. So I'm also very excited about Polygon. And yeah, just seeing more people come onto this technology each day, and be able to use it in an affordable and scalable way. So yeah, I'm excited about what we're going to see in 2023 in preparation for the halving, which is about a year away.
I think this was a very interesting statement again, Demelza. From my side, I think I have nothing to add. Maybe you, Chris, you want to add the last word, Demelza, please.
Buy Bitcoin.
Yep. Bitcoin.
Okay. Great. I mean, thank you very much. Obviously, this is not an investment advice. This is your personal and our personal views. We just discussed about it. Everyone has to decide himself. I think and it was very cool to have you here on this panel. It was interesting to talk at this current time, and it was also interesting to see that also both of you are still optimistic as far as I see for the space, and that we see also different regions of the world have different approaches. And yeah, let's hope and work toward a good financial inclusive and fair financial system, which puts the people at the center and not just institutions and state agencies. And of course, we're now in some cloudy skies, and but one day there will be more light, and we will see in which direction everything develops. And I think it's very interesting to be part now here, building this new infrastructure. Thank you very much having you here, and looking forward to talking to you soon. Thank you also for our audience for the patience with us. I hope that you liked what you have heard and seen. Have a good evening or a good day. Bye-bye.